I'm sorry to say this, but US stocks will not make you any money going forward. The new GMO asset class real return forecast for the next 7 years is out, and this has never looked as ugly as now. US large cap S&P 500 are projected to offer a negative 3.4% yearly return that over 7 years means that you will likely lose 27% of your capital. And this being not that good when it comes to investing, other alternatives we'll discuss are not much better, but the key issue is that negative returns, while most people, actually 63% of invested money is invested in the United States. Now the question is it better to invest differently than the herd? And of course, if you look at the S&P 500, it looks like the best investment out there. It is up 3x over the last 10 years, 5x from the lows of the financial crisis, and it seems like nothing can deter it from offering 10% returns per year going forward. However, it's a big difference buying now when it is close to 5,000 points and 10 years ago or 15 years ago when it was closer to 1,000. For the same asset that you're buying. And the key question now is, will the S&P 500 offer those 10% returns again, and what are the investing alternatives? We must understand that what US stocks have enjoyed over the last 15 years is the result of the everything bubble, money printing, zero interest rates from 2009 to 2023, and this asset bubble is the result. It's the everything bubble because remember 2006-07, the great financial crisis was a result of a real estate bubble. Now prices are almost double those that led into the crisis of 2009. Similarly, Europe, real estate prices have boomed. This is the Netherlands. And then again, the key question is, will the everything bubble continue forever? I hope it does, because I don't want to see the pain and suffering among people if it doesn't. But I have to also have a reality check that it is unlikely that it will continue forever. It never happened in history. And despite what modern monetary theory says, at some point that interest cost of debt, as we have discussed, bites. And when that cost of debt is there, when things cannot be printed away, when issues cannot be printed away, that's when these negative returns materialize. Now, what are the alternatives? Well, the alternatives are to invest, not speculate on stocks going up, but to be a real investor. What does that mean? Real investing is boring, like watching paint dry. If you're having fun, then you're doing something wrong. And the key is to accumulate businesses over time. Those businesses that you own pay dividends, you reinvest those dividends and accumulate more businesses. That accumulating wealth, accumulating more, owning more of businesses is investing. Everything else is speculating. And then of course, you save, you invest, especially when stocks are down, you save more, unlike other people, and you buy more, and that is the secret of investing. So I hope that we as investors have more opportunities to invest down the road. And one example is Archer Daniel Midlands, that is now fairly priced, that we just discussed in a video. You can check that out. And okay, the dividend yield is there, the food business is there, the essential business is there, and then you can see how that fits your portfolio. But it's not sexy, it's not exuberant, it's just counting the beans over a life cycle, and you end up well off. Of course, you make a lot of money when those exuberant times happen again, but I wouldn't count on those happening again, as that has already happened. Thanks for watching, I'll see you in the next video.